Welcome to The Explainer. Today, we're unpacking a fascinating and honestly critically important topic for anyone working in heavy industry. We're taking some really deep research from the Aberdeen Group, combining it with comprehensive asset lifecycle data, and transforming it all into a visual guide on the strategic business case for decommissioning assets. So, if you've ever wondered exactly how the most successful industrial firms manage their massive physical investments from cradle to grave, well, you are absolutely in the right place. I want to start off by asking you a question directly. Just think about your own operations for a second, or even those of the companies you follow closely. What is the most costly yet most forgotten phase of a major industrial project? We spend years and sometimes literally billions of dollars acquiring, designing, and operating these assets. But what actually happens when the asset is done? All too often, the retirement of that asset is completely overlooked until the very last minute. And as we're going to see, that oversight is incredibly expensive. To put this into context, consider this staggering number: 34%. According to the Aberdeen Group, 34% of asset-intensive companies identify increasing risk exposure as their absolute top pressure. We're talking about organizations in oil and gas, utilities, chemicals, mining, industries where just a single physical asset represents a massive chunk of the company's total value. When you're squeezed by this kind of risk, optimizing your scarce resources isn't just a nice-to-have anymore, it's a matter of survival. And that sets a pretty urgent context for why we really can no longer ignore the end of an asset's life. Here's our clear roadmap for this explainer. 1. The complete asset lifecycle. 2. Decommissioning, costly afterthought. 3. Rising risks and resource pressures. 4. How industry leaders succeed. And 5. Executing the decommissioning plan. Okay, let's dive into this. Section 1. The complete asset lifecycle, from acquisition to retirement. If you look at how the timeline breaks down, it's separated broadly into the acquisition phase on the left and the operation phase on the right. You can clearly see the cumulative committed lifecycle cost absolutely rocketing upward during conceptual and detailed design. But look all the way over to the right. Retirement and disposal are just sort of lumped in at the very end as this tiny sliver of time. It perfectly captures the general industry mindset, right? All the heavy lifting and capital investment is front-loaded to get the asset producing as fast as humanly possible. The end of the line is treated as just a simple, non-recurring cost of shutting down. But in reality, disposing of complex industrial assets requires people, specialized materials, transportation, and entirely new, rigorous safety protocols. Section 2. Decommissioning. Costly afterthought. The opportunity cost of waiting. Now, what's really interesting about this is the math behind late planning. It charts out what we call the 10x cost multiplier rule. If you make a design change during the conceptual phase, let's just say it costs 10 units. If you wait until the detailed design phase, it costs 100. By production, it's 1,000. And if you have to make a change during actual operations, it literally multiplies to 10,000. So, planning for decommissioning during the initial conceptual design phase is a financial necessity. If you wait until the asset is already being retired to figure out how to safely dismantle it, you are paying the maximum possible premium for every single decision and change you have to make. This quote right here from a project manager at a mid-size utilities company really hits the nail on the head. Optimizing both time and cost requires experience and technical knowledge. But if you haven't actually planned for a decommissioning project, you are basically flying blind. Delaying end-of-life planning doesn't just hurt the project itself, it bleeds resources. When a decommissioning project inevitably goes over budget or misses its timeline because it was just an afterthought, it eats up capital and human resources that could have otherwise been invested right back into the growth of the business. It is a massive opportunity cost. Section 3. Rising risks and resource pressures. Navigating the demographic cliff. Asset-intensive heavy industries are facing some truly unique external and internal pressures right now, as identified by the Aberdeen research. Sure, we have volatile markets and increased competition. That's standard business pressure. But pay really close attention to the talent issues, a lack of available skilled resources, and more specifically, a retiring workforce. Guys, there is a demographic cliff on the horizon. The employees who built and operated these complex industrial assets possess undocumented, intrinsic tribal knowledge. If you wait 30 or 40 years to plan your decommissioning, the very people who know how the facility was actually put together will have retired and walked out the door, taking all that vital knowledge with them. You're left trying to dismantle a giant puzzle without the picture on the box. So, are you a leader or a follower? Section 4. How industry leaders succeed. The power of proactive planning.
So the crucial point is how the Aberdeen Group separated the top 33% of performers, the leaders, from the bottom 67%, the followers. The performance gap between them is absolutely vast. Asset-intensive leaders are delivering 86% of their projects on time or early. The followers, just 47%. Leaders are achieving this operational excellence because they don't treat the end of a project as some afterthought. They treat decommissioning as its own major capital project, with the exact same rigor and discipline as the initial build. And here is the defining metric behind that success: 88%. Leaders are 88% more likely than followers to put processes in place to attack the decommissioning phase, right now, early in the asset's lifecycle. They aren't waiting for the asset to break down. They're planning its retirement while it is still being designed and built. To really grasp why this early planning is absolutely non-negotiable, let's look at the ultimate high-stakes, real-world example: nuclear power. A nuclear power plant is designed to operate for about 30 to 60 years. Decommissioning one of these is both an intensely technical and an administrative marathon. It requires securing strict funding assurance decades in advance, submitting incredibly detailed cost estimates years before the operating license even expires, and navigating massive environmental cleanup. You simply cannot improvise the decommissioning of a nuclear plant. And this brilliantly illustrates the sheer complexity of those decisions, because you have completely distinct operational pathways for end of life. You could choose safe store, where you lock down the facility and literally wait 40 to 60 years before dismantling it, which is just an incredible time frame to plan for. You could choose decon, which requires immediate decontamination and equipment removal to lower radiation levels. Or you could go with entombment, permanently encasing the material in concrete right on site. Each of these varying end-of-life options demands a completely different long-term strategic plan, vastly different funding models, and entirely different resource allocations. You have to know exactly which path you're taking long before the asset stops producing power. Moving on to our final section, Section 5, Executing the Decommissioning Plan, Embracing Real-Time Visibility.
To find the solution, we kind of have to look at the project killers first. Notice the top 2 reasons for failure here. 51% of the time, failure comes from poorly defined project requirements. 35% of the time, it's because changes are introduced after the project has already started. This proves that a lack of upfront definition and poorly managed change requests are by far the biggest threats to your timeline and your budget. If your decommissioning plan is vague, or if you're trying to adapt to changes through disorganized emails and manual spreadsheets, your project is going to hemorrhage money, for sure. Let's move to and see how this builds into the ultimate solution. This quote from another project manager is the key. They stopped using traditional siloed shared file servers. Instead, they migrated to a collaborative platform environment. By moving to a centralized repository, everyone in the organization is working off the single latest version of the truth. When delays or unforeseen incidents inevitably pop up during a long decommissioning process, leaders can capture that data immediately and adapt without breaking the entire project structure. Okay, let's summarize the actionable steps organizations must take to shift from being a reactive follower to a highly profitable leader. First, you absolutely must have real-time visibility to adapt on the fly. You cannot wait for a monthly report. Second, you need that centralized repository so that vital tribal knowledge we talked about is permanently captured and accessible. Third, you need formal closed-loop change management processes. That way, when a scope changes, the impact on operations is fully understood before anyone approves it. And finally, you must provide external visibility for your partners and contractors. Keeping everyone in the loop encourages lower bids and a much smoother execution. Well, that brings us to the end of our explainer today, and I want to leave you with one final provocative thought to reflect on. Are you planning for decommissioning today or paying for it tomorrow? As we've seen, ignoring the retirement phase of your massive industrial assets pretty much guarantees that you are going to pay the maximum 10x penalty when the bill finally comes to you. Proactive planning isn't just about safety or compliance anymore. It is a fundamental driver of your company's long-term profitability. Thank you so much for joining me to unpack this data. I highly encourage you to go look at your own asset life cycles and start capturing that vital knowledge today.